Good morning, everybody. Welcome to the Flow Show. Lol, 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 lol. Who thought it was going to be a quiet one while we waited for the US CPI to come? What a morning. What a morning. How you doing, K-Man?
Morning, Ryan. Morning, everybody. Yeah, I'm doing all right, mate. Doing all right. Missed most of the action, but yeah. I think market is kind of nervous, shall we say, ahead of the CPI.
Yeah, very jumpy as well. And particularly in the M pairs, if you're just waking up, some of the few Yanks I know get up early to and come and join us on the show. If you're just waking up and seeing some of the moves, particularly in dollar yen, we'll be going through all that in a moment. Right, where should we start first? Let's get the easy crap out the way first, shall we? We'll start with the RBA. Deputy Governor Hauser says that data needs to come in line with our forecasts before they think about changing policy, but said there is no particular trigger figure for inflation for us to ease policy. So it's really all going to be about the direction and speed, more so than putting a number on it, although they do have targets like everyone else. Bank of France sees a flat fourth quarter after 0.4% growth in Q3. So they're not looking for much of a bounce in the end of the year over in France. Right, let's get stuck into some of the big stuff. Over in China, we sat down to some news that, and this is all sources stuff, that the PBOC head policymakers are apparently considering allowing the yuan to weaken in 2025 on the threat of Trump tariffs. They note in the story that the yuan did fall sharply during the prior China-US trade tensions in 2018. They said that a weaker yuan could help boost exports and fight deflation. The sources there saying that China has recognised that it may need bigger economic stimulus to combat Trump's tariffs. Those are the sources piece. And the second source said, and this one is apparently connected to the PBOC, said that the PBOC has considered the possibility the yuan could drop to 7.5 to counteract any trade shocks. So that was the first thing we got this morning. That was dollar China shooting up from the 725s up to 729s. Now, a couple of things about this China news. Firstly, it's not often we get sources pieces that are direct from the PBOC. What we tend to get is state media drops, usually citing as they call it, researchers, various banks and whatnot. That is usually the mouthpiece in how they drop headlines to the market about what's coming. We had a lot of those coming prior to their big kitchen sink throw-in, all the rate cuts and RRR cuts and everything all come out through research pieces, if you like. So this one directly pulled up by Western press, direct from the PBOC, is a bit of a change of tack. I don't think it's a real threat as of yet. It's more a bit of a broadside to Trump and the US on the threat of tariffs. So take it for what it is at the moment. They're potentially looking at it. It also is a bit damaging if they take that route, because then they risk sparking a currency war, because if they weaken their currency, make exports cheaper, that is going to impact other countries, because then their countries potentially get flooded with even cheaper Chinese goods, which then brings around potential import restrictions and whatnot. So it's not just a one-way street, hence why they might shoot themselves in the foot or create bigger problems if they go down that route. Now, that's not to say they won't, but take it for the moment as it's, as I say, a bit of a broadside to the US. We might have to see how Mr. Trump responds, if he responds at all today to it. So keep yourself plugged in for any truth bombs. What it does do, though, is it just ramps up, it escalates these pre-inauguration headlines, if you like. So we're just getting a bit of a build-up, bit of an escalation in all this to and fro and rhetoric between the countries, and that's probably going to grow the closer we get to Trump actually taking the hot seat. Kay, just on the China stuff right now, what do you make of it?
Yeah, as you say, it's pretty clear and direct if it's coming from the right sources. Yeah, it was to be expected somewhere. Yeah, if Trump tells us what he will do, the rest of the world has a right to answer, I'd say. Um, it is a bit strange that PBOC would openly come out and say we're going to let the yuan weaken because in a way I'm not sure it really helps their cause right now. And especially that the market will likely say it's coming directly from the right sources. So let's start hammering the Chinese yuan a bit on beforehand, which is now the risk that they are taking. I yeah. I just want to see what happens if we get up to 30-31 again in the Chinese yuan. But we've been talking about that potential currency wars. Even Trump said it before the elections. Some around him in the team were already saying that they wanted a weaker dollar. Now the others have right of response, I guess. So that's where we are now. It all makes for a very interesting few weeks after the inauguration.
Yeah, exactly. And even leading up to it, I think we're going to see
Exactly.
plenty of this to and
There's
fro.
yeah, there's going to be a lot of speculation ahead of it, right?
Yeah, very much so, very much so. So things are potentially going to get more volatile or more choppier. So you just have to be careful for that. I think what we do need to keep a close eye on now, just to see if any of this threat is real, is whether they start shifting their fixes higher. They've been fixing 719s, 718s. That was unchanged today, 718s. If they start ramping that up, then that will be a bit more of a signal. So we'll just keep a close eye on those again. Right,
Funny,
off to go on, mate.
the funny thing will be that if they start to do that, then for as long as she's still in the seat, Yellen will come out with her report saying that China is a currency manipulator.
Yeah, well, they'll have to wait till April, I think, for the next one. So they got a lot. They built themselves some time just doing it a few weeks after we got the last one. So yeah, we shall see. Right, out of one frying pan into another fire. Japan. Right, first and foremost, just over a week ago, we had one of the BOJ, Doves Nakamura, saying that one of the data points he'll be watching to make a decision for this week's or next week's meeting is the Tankan report. Okay, that came in at a -1 versus 5 prior. Some of the other numbers a bit soft as well. Non-manufacturers index was better, so the services side of it was better, coming in at 30 versus 19 previous. I don't know why they don't show off this stuff on this calendar, but anyway. So the services side was better. Manufacturing was worse. I'm not sure what they're going to pick up from that, or Mr. Nakamura is going to pick up from that. Will they look more at services, K, than manufacturing?
Well, they should because considering that the bigger Japanese manufacturers, and then you think about the heavy machinery makers, you think about the car makers, are producing a lot elsewhere. So it could be then that they will be looking at services more than manufacturing. But yeah, I mean, traditionally they probably will look a bit at both. But it's an extremely volatile number. Yeah, this manufacturing data. We can see it changes from 1 to 4.5 to percentage points. It's a bit volatile right now. But I think it's like the sources piece is perhaps more important than those data points in right now.
Yeah, absolutely. Well, before the sources piece came out, the data was
Yeah,
looking really important because we got PPI as well, which came in a nice healthy beat year on year. It was expected to drop 2 pips. Prime month got revised up though, so it's double better because it came in at 3.7%. Month on month came in higher as well. So on the inflation front, all looking good as far as the BOJ is concerned. We've also had, and before I get into sources stuff, we also had the Japan Auto Workers Union calling for monthly pay increase of more than 12,000 yen in their labour talks or wages talks next year. I don't know what that is in percentage terms, but we'll have to look at that. But we're already starting to get some pay calls for next year, which is something we need to monitor into the new year. Right, then we got the good old Bloomberg sources, and you know what they're like. We're always telling you what they're like. So they hit us with 4 lines. The first line came out saying that the BOJ is said to see little cost to waiting given current prices. Then they said there's less risks of weak yen pushing up inflation. Those are the first 2 lines. The second line said some officials are not against a rate hike in December if proposed, and to see the next hike as a matter of time. Sources pieces. Now, the market initially read a lot of that as being hawkish, hence why we got that blowout to 150. That lasted pretty much nanoseconds before the whole story was read, and the whole story was mainly talking about the hold side of things, i.e. they may not mind waiting a bit longer just to see what's happening with inflation and other stuff, i.e. potentially knocking out the potential for a hike at next week's meeting. That's what got the reversal and saw us then going up, breaking 152 and soaring all the way up. Where are we now? 152.79 is the high. So a big reversal. We struggled to get through 152 yesterday over yesterday's fix, and indeed had a pullback overnight. But this is a big old move now. It's the old boat running K from one side, or the seesaw, more like one side to the other.
Where's the whale?
Have we gone away from a hike now next week?
Well, the thing is, right now, it reminds if we take not only this one but also the other article, yesterday's article into account, where the Bank of Japan scheduling that unexpected press conference in speech in January. It does it all mean that December is off the table? I'm just wondering, and I'm probably wondering as much as anybody else is right now. I really don't know whether we have to take now the expectations off the table. Until those 2 articles, I was thinking that, and we were already discussing that the possibility of a hike is still there, but it may not be a full 25 BPs. So, well, I guess it pushes the market into the camp of 0 to 10 then BPs, yeah?
Yeah, or I don't know, or even not at all. I really don't know. I can't. Well, I mean, we said, I think it was yesterday, we said we're well within the zone now of getting BOJ sources piece, and lo and behold, we get one this morning. We can't rule out any more. This has come from Bloomberg. We should expect maybe something dropping from the Japanese side, Nikkei, GG, any of those, to drop some more sources pieces. I really don't know. I don't know if this. There's so much in the air regarding this one. If they hike, like you say, how much they hike by. But now, do they not hike next week based on this story?
They do have, if you take away Japanese data, they do have the US CPI out today, and they do have the Fed results hours before their own results. Now, that could actually play a role. Imagine that we get a high CPI here today, and the Fed stands pat. BOJ may be tempted to hike if you look at it from that angle. But yeah, I'm same as you. I was in for a hike until those 2 articles, I must say.
Yeah, I think from this point you can't, as we've learned for the last few years, you can't call anything based on one day's information. Right now the market's saying they're not going to hike. So we know the bigger price risk now is if they do hike. That's if we're still leaning that way going into the meeting. But we've got over a week to go before the meeting. So
Yeah, that's the
anything can
thing.
happen.
That's the thing. If you look at the top and bottom of that move on the article, you're done 180 points. There's a week and a half to go until the Bank of Japan. We could be at 158 or at 147. Who knows?
Yeah, exactly. So for now, don't get married to what's happening at the Bank of Japan. Your ideas, your thoughts. Take each day as it comes. As I say, could be a completely different position come the CPI data later on and what the Fed's going to do. So yeah, we'll just roll with the punches. If you get lucky, if you manage to make money on moves like this, don't look the gift horse in the mouth. Take the profit, take some profit. If you want to leave a little bit on for interest, then do so. Conversely, if you've been unlucky enough to get caught on the wrong side of it, that's trading. Unfortunately, you have to take the punches as you get them. I'm afraid. That's the way trading goes at some points. Right, let's move on. Just a little bit of data yesterday. Not one I keep a huge eye on, but the number struck me yesterday. It was the US NFIB Small Business Optimism Index with a particularly large jump in the number, as you can see there. So small business optimism picking up. Is it some Trump effect? Who knows? But that's another brick in the wall for the soft landing or no landing wall that's being built at the moment. So that's a decent jump there. As I said, could be just some optimism coming in. And as I've spoken about before, sometimes sentiment, optimism can translate into activity. Reuters poll sees the Fed cutting 25 pips next week, say 93 of 103 economists. The EU are making friends again. They've advised members not to give the UK greater access to energy markets. Boo hiss. It's pantomime season after all. We've had a few banks, chief this, chief that, chief the other, coming out with various calls and ideas. Citigroup, and this you can take these as reverse indicators if you like, particularly if you want to short stocks. Citigroup says that the global economy is proving to be resilient and China is starting to show stabilisation and a rebound from the bottom. Goldies, they say there's no question that the US economy has proved to be resilient, which it has. Says the Trump admin is likely to run a pro-growth agenda. Well, what if he's going to be chucking tariffs on everyone? He's not. Anyway, that's the call from some of the banks there. Apart from that, it's been fairly quiet on the headline front, apart from all those bombs this morning. Kay, anything else from you?
Geopolitics, but it's an ongoing thing, right? Syria, Israel, etc., etc. Not sure if that is really moving the markets. Maybe one part of the reason why gold is still doing very well, but yeah, I'm not sure the markets are focused on that right here and now.
Yeah, exactly. Right, so a fairly big day today. Let's look at the what's coming up, the US CPI data first, what's expected. So we're looking for a tick up in CPI to 2.7%, the core coming in unchanged. Now, if you just go look at what has been happening in CPI, because it's the trajectory that's important. It's been stalling. Headline CPI has been stalling. We came down to 2.4%. We bounced 2 pips last month. We're looking for another pip this month. So this is what got the Fed, some Fed members, a little bit worried as to whether this is the start of another inflation bounce or whether it's just temporary factors. More importantly, the core number, it's been stuck in this range. 3.3, 3.5, 3.4 for quite some time now. So more than a few months after coming down to 3.2, it's done nothing but stay there, go a bit higher. So expected to remain sticky. So this is proving far more stubborn in the core numbers than it is elsewhere. I know they look at PCE and whatnot, but this is the first inflation data we get of November. Comes before the PCE, so this is the first look we get at it. So sticky, sticky, sticky. I think for me, and what determines whether they cut or pause, forget 50s. 50s are off the table. It's going to be a 25 or a nothing. I still think it's a 25, but I'm a bit closer in terms of percentages as to whether they cut or pause. If we get a number that's in line, 2.7, 3.3, then I think it's a real coin toss. If the number comes in lower, let's say we get a 3.2, 3.1 on the core, 2.6 unchanged, or 2.5 on the headline, let's go back to that, then I think the 25 is going to be a done deal. Anything higher than what we're expecting, and that's really going to push the market into pause mode. If we get a 3.5, a 2.8, 2.9, then I think there's a real risk of them potentially pausing. And if they don't, if they cut, it'd probably be a cut with an indication to maybe pause early in the new year. So that's how I'm going to be looking at the numbers. Kay, any thoughts from you?
Very reasonable, and yeah, that's about it. Sticky coin toss. I'm still in the 25 camp as well, but let's see if it's higher. Then we really need to consider a pause. And if it's lower, then probably the dollar will correct a bit. But if it's, I would even say sticky, but especially higher. I would be very careful because the dollar is already bid versus most, except just a few. The dollar is already bid, and this could start to have the looks of a wrecking ball if those CPI numbers come out higher than expected.
Yeah. There's a lot of dollar pairs that are breaking, on the cusp of breaking, not looking too hot. We'll look at those shortly, of course. Right, on to the next one then, because then we've got the BOC to deal with. Market is looking for a 50. These are the economist expectations here. Mark, I think it was Mark or James in our chat room, posted that pricing is looking at around a 40% chance of a 50. So economists might be one thing, the market's looking at another thing. So just a 40% chance of a 50 cut from the BOC. Again, this is a bit of a coin toss. They've done a lot. They've done 125 basis points since the summer already. This will be their second 50 to go. Yes, they've got inflation numbers on their side, but they've also seen a bit of a bounce, not quite the same as we've seen in the US. They've seen a 1 month bounce in headline CPI, and I think a 2 or 3 month bounce in the core number. So again, it's come down, but now it's either stalling and going the other way. So there's cases to be made why they go at 50. Inflation is still low. The economy has maybe shown a bit of weakness, including that unemployment report last week. But again, on the flip side, as I say, they've done an awful lot. And if they go 50 today, that will be 175 basis points in total since the summer. And if there's one thing that central banks often tell us, is that they realise that changing policy comes with a lag. You don't cut today and see the effects tomorrow. It can take a few months. The further they cut, the more potential it has for stoking inflation. So there's arguments both sides of the coin here. I don't know what they're going to do. Personally, sitting here, I'm stuck in the middle, so I can only react to that. I think the risk is greater that they go a small one and that the market isn't really expecting that. So I think that's where the big price risk lies. And if that's the case, then that could see dollar CAD coming down a bit. Your thoughts, Kay, on the BOC? They keep putting us in a pickle, these bloody central banks, don't they? Are you there?
Oh, sorry, I was I didn't see that I was on mute. 25 for me, but the argument on the basis of not knowing what the Fed is going to do. And then even though McClem said that they were not at the limit of the divergence yet with the FOMC, I'm still of the view that psychologically they should. Now, if will they? That's another question, of course. But should build in a little bit of caution ahead of Trump taking the seat, ahead of knowing what the FOMC will do. They do have, but I guess their decision will already have been made because they have to prepare the statement. But they do have the CPI in the US out before they announce anything. So have they prepared two different papers of 25 and a 50? And it's possible. It used to
Yeah.
be the case in the old days that Reuters and everybody they always had like two or three sets of comments depending on what a central bank would do. Now, does the central bank have those two or three sets of statements ready? I don't know. But yeah, just a case of perhaps keeping a bit of powder dry. And seeing what the FOMC will do. There's still reasons enough to do bigger cuts, perhaps later on.
Yeah. Oh, Mark's just corrected. He said that was off. It was about 90% for those expectations.
Yeah. Well,
Okay.
I'm taking the 10% on the other side right now.
Good. So yeah, it's going to be a real bum fight, this one. Did we get a presser with this one? Are we getting a presser with this one? Yes, there
Yes,
we
we
go.
do.
Yes, we do. So we'll hear from Stiffers and Rogers, as we like to
Yep.
call them, Stiff and Rogers, later on. But yeah, it's I don't know what you do with this one. It's going to be a real swinger for the dollar CAD. You know, depending on what the US CPI has done beforehand. So yeah, it's we're banging a head up near this 142 area for now. Maybe we don't want to push too far ahead of the BOC in dollar CAD, but we've got a decent range building up here. This 141.50s area, 40.50 area holding the support again. We've got the bigger move down to 140.90s that held the other day. So a lot in the mix here. Without all the rest of it going on, I potentially would have been a bit of a dip buyer if they win a 25 today. But I don't know with anything else going on.
I mean, imagine Ryan, they do the CPI comes out a bit stronger and they do 50 in Canada. I think you have to widen your view a little bit on the dollar cat then because your first stop
Yeah.
maybe 145.
Yeah, we'll have to go on the wider chart. Yeah, cool. We could be up here 144s something.
Yeah, I mean, why not? If they really go, if we really get that combination, it's going to be very important, and that's what people have to understand because you can speculate on one thing and then have a completely different outcome. But I'm completely in Ryan's camp. I feel like dollar cat kind of whatever happens is going to see bits on dips, but you can't rule out completely a CPI that prints a little bit weaker and they're still doing 25. Then your dollar CAD is back at 140, the big figure probably. But the thing, yeah, I'm more in your camp, but we need to, as a trader, always look at you don't isolate Bank of Canada from the US CPI today. You have to really look at it together because that is where your potential biggest move is going to come from if you get certain combinations in the outcome. And that is something that we will need to judge. And it's not only valid for the Canadian dollar, of course, but if as I said before, I mean, if you imagine that you get a sticky or higher CPI and you're already looking at a weaker euro, for instance, it's going to have a big impact on the euro. But to come back on the Canadian dollar, today could be an absolute big mover on the dollar Canada. I think Ryan has gone for a week.
Oh, sorry, I've done the same thing now. Yeah, I was going to say you raise a very valid, important point for today. Okay, we've got these big events, we've got all this news floating around already, so we've got higher volatility today. There's no point if you want to trade dollar CAD over the US CPI and the Bank of Canada. There's no point looking at levels 20 pips away from market. Okay, go on your bigger charts, go on your wider charts, look for the bigger levels where the price may do something. We're trading 141.88. you know, we could be 142.50, we could be 141, 140 over the CPI data. Okay, so there's no good pissing around with 20 pip positions bang in the middle. Pick your wider areas, pick your wider levels, your stronger levels that may do something, and use those. But just don't get caught up in the chop in the middle, because there's no point. And that goes for any dollar pair today. Okay, there's lots of stuff going on at the moment. Right, I think that's it on the data front and whatnot. Nothing else out, is there? No, we'll have a little breather after that. Oh, just a 10-year no auction later on. Yeah, I'm sure nothing will happen with that one later. On and on and on it goes. Right, so what are we doing? What are we doing? Dollar yen, have a quick look at that. Again, there's no reason to be setting yourself in the middle here. Okay, 152, this might become support now that we had a big breakthrough. Next level for me isn't up until, you know, we get into the 153s. We probably see a bit of trouble getting into the big figure, as we often do, but otherwise we've got this bit of a old S&R line here, 153, 2040, call it. So that's the next potential level for me up there. We came close to this 150.80s. We got to 151, give or take, this morning. So that might be a consideration if we do see a steeper dip. So be careful on that one. But yeah, I was a little bit short yesterday into the fix, playing at 152. Got a bit lucky this morning, but yeah, I'm probably going to sit on my hands. We're back in. It's still far too volatile for me to take it seriously, bar the odd snipe here or there. So I'll be leaving that one alone. Already looked at dollar CAD. Aussie is looking a bit worse for wear at the moment. We're through Mr. K's trend line now. We're through my line in the sand, which was these prior lows that we've had around this 63, 50, 60 area. Okay, we've been down here a few times. It's been a bit of a catch point for quite some sharp moves. This one is more solid. It's got a bit of oomph behind it. So it's a bit different to these last two moves, which were a bit impulsive. So this one is now could have opened the door for a bigger move lower down into the well into the 62s maybe. Got this traffic zone here around 62, 70, 80. So that's potentially the next place that we might find some problems, and that's where we could be heading. Look for, I'll come into the shorter time frame now. Look for resistance coming in to any of these levels now. If we get resistance coming in here, like we've seen all through these moves, breaks and holds, breaks and holds. If we get a similar move down here, then we're going to be pushing lower. That's likely as well. Iron Up was looking at Kiwi as well. Same thing. You know, we had these lows, we've broken the lows. We're already resisting these lows. Okay, so technically this is still bearish, and it comes on top of what we've been seeing already. So there is no reason this trend is turning around. Might have looked like it was turning around when we were trying to hold around here, but since then it's break, 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 break. So would I buy a dip? I have no reason to buy a dip right here, irrespective of the data. We're even cracking below that low now. So we've got a few little, again, a bit of a line in the sand coming in at the moment. So would I buy it down here? No, not really. This one, I'll have to do chuck a few more lines on because I've got nothing down below. It's looking very weak. We've got a bit of a speed issue going on for my Aussie Kiwi. This is a similar vein to what happens with Euro Sterling and what moves further. Aussie dollar is not going down as fast as the Kiwi dollar. And that's why we're seeing this one back up, knocking around the 110 level. So maybe a bit of a turnaround. I've been noting this second phase move, bearish move. Well, now we're just starting to go the other way. Instead of lower lows and lower highs, we're now just turning it around. Now we're just making some higher highs. Higher lows and some higher highs. So I'm not saying this is going all the way up, back up there, but I think maybe we might be stopping from going down for a bit longer. This was one of the worries I had if I saw the RBA taken a little bit more of a dovish tone, and they took that little step yesterday. Last one, euro sterling, and I'll bang it over to Mr. K. We've had this break, this level we've been talking about long enough. We haven't even had a retest yet, so we're still looking very weak. We're creeping down towards that big fib level. Oh, need to go even wider. So that fib level and around the 82 level is the big old number. That's the key one for me. I'm still short. I'll be taking some profit down there. Might even think about a separate long. I don't know. I'll see what happens if we get there for now. Right, Mr. K, you can have it for a few now.
Yeah. I'll straight take Ali's dollar Swiss question. Hold on. Yeah, so what's been happening here, right? Dollar Swiss below 88, banging its head against it, and then we moved back through it yesterday. 88 figure 20 is still going to be the important level that we are watching going into the US CPI. A bit the similar question as in would you buy a dip in the Kiwi? Although dollar Swiss is not in the same area of strength than the Kiwi dollar is in the area of weakness. But it's all the same question today. Is the US CPI going to give us a pause with the Fed? Is it going to keep us on a 25 path, or is it going to be any worse if the number really surprises to the downside? Now, that's where your 88 figure 20 will come in. We are through it. It testifies of the global strength of the dollar right now. Because if you look at, for instance, Swiss versus other currencies, it's not really doing too badly. So it's really going to be a dollar story. We have to break 89. A good start would be to go above 88.90, but we have to break 89 to really push on. And as I said a bit earlier in the show, if we see a stronger, very sticky CPI, there could be a bit of a dollar wrecking ball unfolding in the markets globally, and we can see the dollar strengthen versus everything really, because we are a week away from the FOMC, so that is going to be quite a determining data point that we have today. So everything about the 88 figure 20, if you look below here, 87.30s, if we get a really weak one, we're probably going to dive through and get a test of 87.50, 87.30s on the dollar Swiss. The breaking point to the downside for me is 87, the figure. You can look at here. It's also been the springboard for the last move higher. It's banged its head against it several times, traded around it here. So we can see even before it's been a zone of interest. This 87, the figure on the dollar Swiss. So that is or would be my real breaking point to the downside. So you're looking at, if you look at it on a bit wider, 87, 89, with your hinge in between 88 figure 20. Okay, that for the Swissy. Yeah, let's go gold. Gold is about not the only thing, but it's about the only thing that is still stronger versus the dollar. It's acting as a bit of a refuge for the people to get in there. I mean, think about Chinese loosening monetary policy. Think about potential tariffs. Think about geopolitics still going. Israel still pretty much involved in the whole Middle East region. Uncertainty over the Ukrainian-Russian winter and so on and so forth. So gold is picking up this role despite the rates not doing too much, playing a bit of a yo-yo around 420 in the tens. The twos hanging around at 415, 420, not too much to see here. I still think it's pretty much equilibrium levels that we have, and the decisions should be made later today. So yes, this gold is really holding and showing pretty decent resilience. We're coming up to resistance. Okay, 27.10 stretch it up to 27.20. We had a bit of a push through the other day, remember, end of August, and then end of November, sorry, and then we set in the bigger correction. So that's again going to be the zone that we need to monitor. Okay. Get a very weak CPI. This thing may really look a bit explosive into year end, and we may see it trade back up to 40, 60, or why not even the highs. But let's first of all wait for those CPI data. Okay, supports. The nearest buy 78, 75. You know, I highlighted this zone already a couple of times. Went through, retested, and we're trading higher. So it's already a nice little area to monitor. But I do think that bit more important will be around 26.5, and potentially if we get a really, really strong CPI around the 26, 25, 35 zone on gold. Okay, so that's the look on gold. Silver stabilizing. Not too sure what it wants to do, but we have to respect what I said, this halfway point of the correction. It did cap around 32 and a quarter, 32, 30. That's your level to watch. Turning around relatively neutral, I would say here. CPI will definitely decide on what's happening there. This is one, and I'm just going to repeat what I said already a few times. This is one that we are going to have to monitor if we get a Chinese revival, okay? If we get a real Chinese revival ongoing with everything that they are trying to put in place, this one is probably going to reach for the stars, okay? Um, Euro is living dangerously. Levels are relatively clear from here. In the shorter term, I've got one at 104.80 as well. So 104.80, 104.5, and then if the CPI would be sticky, I think the dollar wrecking ball could do a bit of a job. And why not? We may have to revisit those prior lows that we had last time here. Okay, I mean, this could be in, providing the US CPI is a beat, and this could be in for a really deep dive. Okay, cable quick look. It is breaking that short-term trend line, shorter term trend line. Yeah, we can also look at this one, which is breaking. So again, with the rest of the dollars, we are trying to come down. But sterling, if you look at the crosses, sterling is still doing pretty well. So it's not my instrument of choice to trade the US CPI. But if we break through 127.10 is a bit close, but look at 126.70 or so. If it breaks below there on the CPI, then we can have also a deeper correction unfolding on the US CPI. This one, to me, though, is, if we get a weaker reading, I think cable could be a fast mover to the top side as well. So I reduce positions, as people know in the room. I'm always trading around my positions, so I've really got only very small in this, and I can maneuver as I like. But this is one which is still firmly on my radar in case we would get weaker US data. Okay, I'm always looking at which one has the better chance of doing which kind of move. So I think in case a higher US data, stuff like dollar yen should fly, euro dollar collapse, cable maybe. It will probably follow in sympathy, but maybe not as fast because of sterling doing well against the rest of the currencies. But if you get a weaker CPI, this one is one of my favorites to bounce, together with potentially gold and maybe even silver. I don't know, but yeah, gold is one that I'm looking for still to the other side of things. Dollar makes strong reversals, setting up to the downside or to the top side, Angela. Just not sure at long. Okay, yeah, because of those low 20s holding, that is probably what you're looking at around here, or are you around here? Yeah, This is something that I was short, and I covered it on the dollar mix. I was short here on the break. Took some back on the way down, but not everything. So yesterday, just put a very tight stop and got taken out. I don't have anything here, but it is thanks, Angela. It is one that is still not out of the woods, especially if you don't. If this doesn't change big figures anytime soon, what would be looking as a break here is more rather looking as a flat correction. Probe below yesterday, close above. Okay, yeah, all right. Sorry. Yeah, indeed. Okay, makes sense. And again, if this if that US CPI comes out strong, we have to look at a move up to 2040s and see what happens there. Looking at the interest rate differential, still in favor of the Mexican peso, but we know about the politics going on over there, so that is also going to have an impact on this one. So yeah, I think we need to get a close below those lows and to push lower down. Otherwise, the risk is very much there for this for a resumption to the top side. That's it for me, Ryan. Back over to you.
Yeah, thank you very much, mate. Angela, while we got you here, I forgot to reply to you on the old DMs on Twitter, just regarding being set up on the chat room for winning the NFP compo. So just read your DM for that one, please, and look forward to seeing you in the chat room again. Apart from that, have a great day, everybody. Stay safe, trade safe. Remember the volatility that we've got today. Factor that into your trading, the levels you look at, and how you trade. Trade safe, have a good one, and we'll pick up the mess tomorrow, no doubt. Cheers, Kate.
Thank you, mate.